How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. As of today, that account is sitting at $75,851.95. That is up by $398.72 from my last video. Slowly but surely, if you've been following along this Blue Lion Finance journey, we are building back upon the losses of all of this volatility. As of just a few weeks ago, we were sitting at an all-time high above $76,000. However, here we are making our way back. Now in today's video, I want to get right into the two REIT investments that I foresee as incredible opportunities for long-term investors to not only take advantage of, yes, an incredible REIT, but REITs that are growing both in terms of their dividend as well as their stock share price. A video you will not want to miss out on. Now, just before we actually dive in, go ahead, tap on that thumbs up button as it helps me grow the Blue Lion Finance channel. Moreover, if you personally have not already subscribed, go ahead, tap on that subscribe button for me. I not only want each and every one of you along this journey with me, but want every single one of you with the opportunity to take advantage of the $50 One Hope Wines gift card giveaway I have underway as we speak, in which one lucky winner, the moment this channel crosses 1,000 subscribers, is going to be selected and sent that gift card to pick out the wine of their choice. Definitely a giveaway you will not want to miss out on, so cheers to that. Now YouTube, with all of that out of the way, let's go ahead and dive right in. So as many of you know, I am a huge fan of REITs. Those are real estate investment trusts. Now, when it comes to REITs, I'm sure many of you have seen my videos in which I'm talking about Realty Income, Stag Industrial, and Store Capital. Those are among my go-to REITs. Now, as mentioned in today's video, I'm going to be talking about two REITs in which I recently just came across, realized that not only were they undervalued, but most importantly, they have incredible dividend yields, and on top of that, they are poised to grow both in terms of their stock share price as well as that dividend yield, which makes me incredibly excited to share those opportunities with you. Now, I will say between Realty Income, Stag Industrial, and Store Capital, those dividend yields are about 3.5 to 4%, which is right in my personal sweet spot. The two REITs that I have for you today, however, are above 5%. Now, that does not make them, say, on the risk level of an AG&C where they can slash their dividend at any given moment. The two REITs I have for you have a proven track record of paying out their dividends, increasing those dividends, and doing so year over year, which is exactly why they made it onto my personal watch list. So without further ado, the very first REIT is WP Carey, that's ticker symbol WPC. Now, WP Carey was founded back in 1973. Since their founding, they have been doing an outstanding job in growing a well-diversified portfolio across industry verticals. Now, they have been buying properties and leasing those properties out to companies within the industrial, warehouse, retail, and office, as well as storage spaces. So again, just incredibly well diversified across industry verticals. All of their leases are long-term agreements, which means they range between 7 to 22-year leases. Certainly that should give you some more confidence in investing in WP Carey and knowing they're not going to be disappearing anytime soon. Better yet, all of those leases actually have rent escalations, which means that year over year, their rents for their tenants are increasing. Now, that is only racking in more and more revenue for WP Carey, which is exactly what I like to see as an investor. Now, when it comes to WP Carey's portfolio, we're talking about a portfolio comprised of 1,266 different properties across the United States and well into Europe. So again, just talk about diversification. WP Carey has exactly what we're looking for, with 356 different tenants, U-Haul and Marriott being their largest tenants. Now, throughout 2020, they were hit just as hard as nearly every single business out there. However, WP Carey held strong with their 98% occupancy rate, which is just fantastic and gave me a ton of confidence to definitely put WP Carey on my personal watch list and now really begin to actually think about investing into this company. What I like to see, of course, is growth, which is exactly what WP Carey is doing, as they've spent nearly $1 billion in the upfront of 2021 growing their portfolio. Now, in even better news, U-Haul and Marriott also announced that they're going to be growing, which means that WP Carey should also see and experience some of their tenants' growth as well as they begin to expand into more properties. And of course, as a dividend investor, my favorite aspect of WP Carey is their dividends. So let's talk about that dividend history of theirs, because since they went public back in 1998, they have been paying out those dividends and increasing those dividends year over year, which makes them a dividend aristocrat by this point and gives me more confidence that WP Carey is certainly the type of REIT that I want to invest in. Now, when it comes to their actual dividend yield, it is currently sitting at 5.51%. Definitely a dividend I want to take advantage of as an investor. Now, prior to the pandemic, WP Carey was trading for around $84 to $87. Then boom, the pandemic hits, they fall to around $50 per share, and they have since then recovered, now trading once again in the 70s. But analysts are projecting that WP Carey is going to grow, with analysts' expectations placing WP Carey at a median share price of $89 per share and a high share price of $90 per share. So if you're an investor out there that believes the worst is behind us, the best is yet to come, then WP Carey should definitely make its way onto your watch list, if not into your portfolio, because certainly it is an undervalued stock opportunity and it is ripe for picking. Now, if you're an investor who foresees more volatility on the way, then perhaps REIT number 2 is the REIT for you, that being Medical Properties Trust, ticker symbol MPW. Medical Properties Trust was founded back in 2003. Now, of course, they're not as established as a WP Carey, but certainly it does not make them any less of a big player within the REIT game. Medical Properties Trust is a company that specifically focuses on investing in healthcare facilities. That's incredibly important because, as we all know, COVID-19 brought investing in healthcare companies to the forefront of the investment world. Everyone's trying to look for the next best investment when it comes to the healthcare companies that are out there. However, not a lot of investors are taking a look at who's actually propping up those companies, and that's a company like Medical Properties Trust, supplying those healthcare companies with their facilities. Now, similarly to WP Carey, Medical Properties Trust has been experiencing exponential growth over the course of the last 12 months, spending $2 billion just at the upfront of 2021. That brings their total spent so far this year to $3.6 billion worth of investing, developing, and acquiring brand new properties, which is certainly a sign that I like to see when I'm investing in REITs. When it comes to their portfolio, they have 440 facilities across 32 states and have even been growing outside the United States in South America, Australia, and Europe. And if that portfolio size of theirs does not give you enough confidence to invest in Medical Properties Trust, it's definitely worth noting that they're the second largest non-government owner of hospitals within the United States. Not going to be disappearing anytime soon, but let's get into that dividend, because Medical Properties Trust has been paying out their dividend for 8 years and increasing that dividend year over year, with their current dividend yield sitting at 5.54%, which is definitely a dividend yield I'm going to enjoy. Now, most importantly is that analysts are expecting Medical Properties Trust to actually continue to grow. The median stock share price coming in at $23 per share and a high stock share price of $27 per share. As of right now, they're trading for around $20, so room for growth when it comes to Medical Properties Trust. And that is it. Those are the 2 REITs that I have certainly added to my watch list. I'm throwing this out to all of you that I am not a financial advisor, so definitely do your own due diligence prior to investing in either of these 2 REITs. But of course, if you liked what you heard, you learned something new, drop comments below. I'd absolutely love to read through them. And before we actually wrap up the video, go ahead, tap on that thumbs up button, as it greatly helps me out in growing this channel. And if you haven't done so already, go ahead, tap on that subscribe button. I'd love to have you along the journey with me. Now, YouTube, until the next video, I will see you all there.